Hey members, how you doing? Hopefully you're having a good weekend so far. A lot of excitement in the markets last week. Kind of picked up where we left off the week before. Here is my portfolio updated as of Friday's close. You can see the year-to-date return right there around 11%, so that's not bad. What you also see is there's not much here anymore. Just have these four long positions and the two short ETFs. So a really neutral stance right now for me, about 70% cash or so. So we'll just see how things develop over the next few weeks and continue to look for opportunities to put that cash to work. So in this weekend's video, I'm going to follow a format pretty similar to how I usually go about it. We're going to review last week's trades, look at some index charts, look at all my open positions, which obviously isn't going to take too long because there's not many of them anymore, and then look at some opportunities for next week. So let's look at the closed trades from last week. I'm not going to go into a lot of detail on many of these because I discussed them in the nightly recaps. But in summary, here they are. EMR, we had a 3% partial gain on the first half, and we sold the remainder here for a 7.6% loss. So all done with that one. CNC also held that one for a while, sold the last portion there for a 13.6% gain after 8 and 16% partial gains on the other ones. That one broke down below, a key area, so no reason to hold that anymore from my perspective. NTR sold the last half of that one, 6% gain on the first half, 4% loss on this half. GTN, this is one I want to go over the chart with you in a minute. That one kind of hurt, 7.5% loss, but I did have a full position on in GTN. So I'll go over that one in a minute. CME, that's the one I sold half prior to their earnings announcement this past week. I just wanted to reduce my exposure into earnings. The chart was looking strong, but I just wanted to, cut out some of the risk in case the numbers surprised to the downside and they had a big gap down or something like that. So I just got rid of a little bit there, booked some gains to reduce the exposure. QID, 8.9% swing gains on that one. That's the short QQQ ETF. Still hold the other half of that one, which is looking pretty good with that action on Friday. And then DG, that was a quick trade. Got in on Thursday, quickly stopped out on Friday. So we'll look at that chart as well. Here's DG right here. So I got in on Thursday. I typically like to wait till a little closer to close. So maybe I was a little early on this one because it did close down from where I bought it. I bought it right here around 1175. I thought it was looking pretty good. Defensive name breaking out, but then Friday it quickly gapped down. So I sold it quick on Friday for a loss under 4%. No reason to hold that anymore. If it can reclaim that 112 area or so, I think this one could look pretty good. But until that happens, I'll watch from the sidelines. GTN, this is one, I'll pull up the weekly chart here. I really liked this weekly chart. The 1750 area was resistance going back to 2015 here, early 2018. Couldn't quite crack above it. Took the dip down, retested it, then it finally broke above it there last week. But that breakout quickly failed. That's Monday, the 22nd, was looking really good. I had entered the position. Let's see, I entered it on the 22nd. And then it quickly broke back below that area. So, this isn't the kind of market that you want to go throwing off new long trades in. But given that this chart looks so good on this daily time frame with this breakout after this tight consolidation here, kind of took a slight dip and then broke out, and then the way it was setting up on this longer time frame, it was really lining up well. I like the risk reward. But again, just because the chart's good, and you feel good about the trade, that doesn't mean it's going to be a winner. So you got to respect the areas, the stop areas. We did that here. Still hurt to take almost a loss of 8%. I'm not going to lie. If I saw the setup again, I'd have a hard time not taking that trade. But this is just a tough market to take long trades in these last few weeks. So learn the lesson here on GTN. So let's go over some index charts. Here's SPY, S&P 500 ETF. It broke above those January highs there in September, is looking really good, and then it sliced below those. And what was interesting on that was on 1010. It really didn't hardly even pause there at the next area that might have potential to act as support. This 280 area kind of just sliced right through that, all the way down to this 270 area that was resistance back here in April, turned to support in July. So it did bounce off of that, but then it came back to this 280 area and was rejected. So now it's sliced back down through that 270 area. Thursday it closed right around there, and then Friday got slammed again. So maybe it's oversold here, but I see all these yellow boxes in these key price areas. It just looks like there's a lot of overhead to work through. So I'd be very cautious here on the long side. I think maybe we're in for some more chop. I think it might be a while before we get back to these all-time highs. Maybe a long while. Who knows? And another thing I wanted to point out was this 200-day moving average. In the last couple of weeks videos, I went over some fundamental kind of economical stats. I'm not going to do that this time, but one thing that some major stock market tops have in common is this 200-day. When it starts to flatten, that's usually not a good sign. You can see here it's trending up. It was trending up when it tested it all these times in the spring, and now it's starting to flatten. And as price continues to trade below that, pretty soon these days over here from January are going to get excluded from the calculation. So that's going to continue to flatten and start to curl down. So that's typically, not a good sign for the market in general. Anything can happen. Nothing's guaranteed. But this chart doesn't give me a lot of confidence to go long. Here's the equal weight S&P 500, kind of similar, just a big drop. You could see that 200 days starting to curl down, so not looking very good there. Small caps, similar look, actually probably worse, but these small caps here, I'll pull up the weekly. Maybe we dig in here around this, 145-ish area. It acted as resistance here back in the summer of 17, bounced back off of that in November of 17, and turned into support. So what was resistance turned into support here, came back to retest it successfully earlier this year. So now we're back at that area. So I think this is a big area to watch in small caps. We'll see if that holds. Right now, maybe we get some chop between these areas. Same with the SPY. Maybe if we can reclaim a key price area, maybe we just get a lot of chop around, and that's not a fun market to trade in when it chops like that. But I think that's that scenario has a pretty good potential of happening here. So we'll just wait and see what happens. But right now, this IWM, you could see that's actually where the lows were Friday. If those could hold into next week, maybe this one could dig in, and we can start retracing some of that loss. But again, as we start getting closer to those highs and maybe getting back to some of these key price areas, the question is going to be, are the sellers going to show up there just driving prices lower? Or are we going to be able to reclaim those? So I don't know what's going to happen, but I do know that there's definitely some work to do to get back to what looks like a bullish market for these indexes. Here's the semiconductor ETF. I like to point out this weekly chart. I've been reviewing this for the couple weeks. It had this consolidation here within the uptrend, and then it just really broke below that the last few weeks and just continued to trade down. So not a good look for the semiconductors, which is a very important part of the economy. Emerging markets, more. Not much to comment on here. It's a downtrend since January, really. And then here's the VEU. This is the All World ex-US ETF that I've been updating. Same, made that big high in January. Now we're down, 20% off those highs. So, it's happened all year outside the U.S. The international markets have been performing very poorly. So the question was, was the U.S. going to kind of help them back up, or was the U.S. going to follow them down? And based on the action the last couple of weeks, the U.S. markets are starting to go down. So keeping an eye on these emerging markets and different markets outside the U.S., that might be a nice tell for when things start to reverse to the upside. But for now, they just look really, really bad. Any moves to the upside are going to have a lot of potential overhead up there, so they might be short-lived. And again, there might be some violent swings both ways. And I talked about in last week's video as well, typically preceding these big market corrections, there's usually quite a bit of volatility. So you pull up the chart of the SPY, there you go. There's a lot of volatility there. That's a 10% down move in just a few weeks. And we had that at the beginning of the year, to be clear, and it worked itself out. But we also had that rising 200-day moving average, and we don't have that this time. So time will tell, but I like the position of having a lot of cash and that flexibility right now, because it might require some, maybe a little bit of quicker trades, tighter stops, but more likely just a lot of sitting and waiting, which is hard to do sometimes for me and for everybody. You want to put your money to work and um, book look for good trading opportunities and book gains, but sometimes it's just best to wait. So let's look at the open positions now. HLX, this one's hanging by a thread. I'm using a little bit of discretion here at the stop, but you can see it's coming to this 850 area, was resistance here and here, kind of consolidated there, had that nice breakout, retest, and it's kind of just hanging in. It went below it a little bit Friday, closed right in that area. So I'm going to give this one a little bit of time. We'll see what happens early next week. If it goes low, especially if it gets below that $8 level, I don't think I'd let it get that far. But if it gets below that, no reason to hold this. So we'll see if it can dig in here, maybe make a run back at that back at those highs from just last week. But just hanging by a thread there in HLX. Same with ALSN. Using a little bit of discretion here, but this area here, around $44 was resistance here and here and here, and it's coming back, kind of dipped below it a bit Friday, kind of closed right there again, right at this 200-day. So we'll see if things start bouncing next week. I think both HLX and ALSN have a good opportunity to potentially bounce and maybe come back to those highs, which would probably be a good spot to book the profits. CME, I commented on that. I sold half before earnings, but this chart's holding up really well. This breakout area of about 172 was resistance here, kind of consolidated, within a range around that area there. It came back to retest, and it's looking pretty good. So not much is changing in my approach to CME. It's one of the few positions that's it's in an uptrend, looking pretty solid. So hopefully that continues. USM as well. That's back at a point here. If you don't have USM, and it starts bouncing off of this, $45 level next week, it would be a good spot to get in and keep your stop. My stop is just below where we are right now. So I think this is a nice trade opportunity for next week if you don't have this one. We had that nice run, booked some swing gains there as it moved up, but now we're back just slightly below my my entry area. So not a bad looking chart. That line there, if you don't remember, is from the monthly. It's kind of breaking out of this base on the monthly chart. It looks really good. So that one is USM. So keep an eye on that one for next week. But those are my only longs. One thing I failed to mention when I was going over the SPY chart, another reason for caution. If I pull up this monthly chart, and I posted this one earlier this week on Twitter, this monthly MACD, I typically don't use a lot of indicators, as you members know, but this monthly MACD it's been a very good indicator of major market turns. You can see here in 2000 where we get that bearish MACD cross, right there, that preceded the top. Here in 2008, again, right there, that bearish MACD cross was right about the top, and we had it in 2015 here. We didn't have that big collapse, but we did have about a year or so where the market didn't do anything. It had that big move down, and then it took about a year to get back over those highs. Same here. It had this slight cross, and then it crossed back above it. But in that time, the market really didn't go anywhere. And you can see right here, zooming in, we got that cross last week. So, if things pick up and get going next week, that could quickly change. But this is just something, longer term to keep in mind. This, like I said before, nothing's guaranteed, but in the past, this has been a pretty good indicator, and this indicates some caution. And this is the 1 year moving average here, that dotted white line. So, that bearish MACD cross combined with move of prices below that in the past has led to some pretty big corrections, or at a minimum, just a pause where the market doesn't move much for an extended period of time. So another reason to be cautious, and makes me, feel pretty good about keeping a large cash position and looking for opportunities outside of long stocks. So let's go through some of those opportunities. So here's what I'm looking at for next week. Obviously a lot of shorts. So if we get a little bounce, this is SH. This is just the non-leveraged inverse S&P 500 ETF. So we have this level here about $29 or so. Acted as support here, kind of chopped around it, and then broke above it as the markets got hit pretty hard the last couple of weeks. But if things start going up, if the markets are up 3 or so percent, it would look like a pretty good entry here in the inverse SH ETF. So that's one I'm keeping my eye on next week. I wouldn't exactly buy it right here. I'd like to see a little bit of consolidation before I enter a trade. But if we do get some consolidation into a potential support area and it starts moving up from that area, that would trigger a buy here. So that's SH. Same here, RWMs, similar kind of idea. But I'm looking for this one to kind of consolidate here, maybe around 41. If that gets back to there, 41.50 or so, that might be a nice risk reward entry for RWM. FAS, this is a 3 times leveraged financial bear ETF. Again, this has this area here, we'll call it 1150. If we can get around there, if it can consolidate and start taking off from there, I think that would be a nice potential entry that I'm watching for next week. And then SOX, I already have this one. This one, it's acting nicely. I need it to consolidate a little bit. But if this one kind of flattens out and consolidates, I think it's a nice opportunity to get long this ETF, which would get you short semiconductors. But you can see it looks like the trend is changing there. So you can either there's no sense in fighting it. If things are going down, you can just flip the chart upside down, right, and play it that way. Same risk reward profile. Just got to look for the trades with the best risk rewards, and you take them without asking questions if they set themselves up. So if things these short ETFs, I'm all looking for a pullback. So that would mean a bounce in the markets might present some opportunities there. There's also some ones if the markets start looking bouncing that I'm looking at from the long side as well. This one is FBP, Regional Bank. You can see this one is in a nice uptrend, and it's consolidating right here around this $9 level. So if it can break, above 9, we'll call it 930 or so out of this consolidation, I think this one has nice potential. I like that chart. Really held up well over the last few weeks as financials and the markets in general got hit pretty hard. So this one held up well, showed some good relative strength. So now if we can get it to break out above this consolidation level 930, I think this one would make for a nice long entry potentially. EW, this is one here. This $140 price area has been key here. You can see going back to March and April, couldn't quite crack above it. Finally did. Then it acted as support, and it's acting as support so far here, right at this rising 200-day. So if it can start moving up, maybe out of this consolidation, 145, 150, I think this one would be a nice trade to maybe try to fill some of that gap there from early October, which would be a nice run in EW. So that's one that's on my radar. A couple of retail names, Five Below. It's kind of testing this old key area. I would need it to break above this, maybe get about 116 or so, and maybe we get a run there at the highs. But this one's not a bad setup. Not the first on my radar, but if it starts moving up, it could start looking pretty good. Goose, this is one. Earnings are 11.8, so you got to watch that this time of year. But this has finally filled that gap from June. You can see it right here around $46. The big runaway breakout finally filled that gap right at the rising 200-day. So this one, if it starts stabilizing there or pulling up, I think it makes for a nice potential long trade there. You can put your stop just under that yellow, which isn't too far below. So you wouldn't be risking much in the potential upside here. You can get a run, maybe retest in low 60s or even mid 50s would give you a nice trade on Goose. So that's one I'm watching on the long side. ABT, Abbott Labs, this uptrend kind of broke, but it's fighting it. It looks like it might try to dig in here at this key, $67 area. So if it moves above, we'll call it $68 or so, kind of breaks out of this downward consolidation pattern, reclaims that trend line, I think ABT has a potential to be a nice long entry next week. And then this is one, earnings are 11.6, so be careful of that. But this chart has held up really well. This is CORE. You can see kind of almost a cup and handle kind of look, but regardless of what you want to call it, it has this area here around $38 that was resistance, had the slight dip there, couldn't quite crack above it. So if it can crack that 30, and we'll call it a little over 38, I'll go ahead and set an alert here. I like to set alerts on charts just in case they fall off my radar. I'll set an alert if price breaks through a key area, so then it'll email me And you can do this. I use this is TC2000. You can do it on various charting softwares as well. But it's nice to get that reminder just in case you're not in front of your screen, or if for some reason it falls off your watch list, you can get the alert, and you can pull up the chart real quick and evaluate if you want to enter. So I got the alert there on core. This is one. The chart's held up really well, so we'll see if it can break out. But again, earnings are 11.6. So what that means, if I entered it next week, I'd either go smaller size, or if I went full size, I would most likely want to trim some before the earnings announcement. I don't like holding the full position into earnings. If it's in a position where I have some gains, I like to book some of those gains, and then reduce my exposure for the announcement. So those are some things I'm watching next week. It's looking to be an interesting week. It sounds crazy, but when the markets are volatile like this, and we have these big down days and upswings, I think it's kind of fun. It's a challenge for me. I enjoy it. And I've learned you don't want to get too crazy one way or the other, throwing off a bunch of longs or a bunch of shorts. It's kind of nice to have a lot of cash and be able to evaluate things with a clear head. But one thing that I will say, this SH chart, if you didn't know what this was and you just looked at this chart, it looks like the trend might be changing here, right? We had a series of lower lows. Now we broke above this high here, so now we have a higher high. So if we start digging in and make a higher low, I think that the argument can be made that the trend in this index, at least S&P 500, is down. It's looking like that for a lot of them. I wouldn't say for sure that's the way it's going to turn out. Only time will tell, but I think it has that potential. So if it does that, I will have no hesitation to make SH a very large part of my core portfolio. So hopefully this gave you some ideas for next week. Feel free to email me if you have any questions, as always, any chart requests or anything like that. But hope you all have a good rest of the weekend. We'll talk to you soon.